Today we will discuss about accumulated depreciation. Okay. First of all, we have to learn what is accumulated depreciation. Accumulated depreciation is the total amount of depreciation expense that has been charged to a fixed asset since it was acquired. Okay. What is accumulated depreciation? So accumulated depreciation is a total amount of depreciation since the asset was acquired. Okay, it represents the decrease in the value of an asset due to wear and tear, obsolescence and other factors affecting its useful life. Okay, so it is a accumulated depreciation. We can better understand with example. Okay, suppose a company purchases a machine for 10,000 with an estimated useful life of 5 years and no salvage value. Okay, what is the example? A machine purchases for 10,000. So estimated useful life is 5 years, no salvage value. The company uses the straight line method of depreciation. Now what is the amount of depreciation per year? So the annual depreciation expenses would be 10,000 by 5 years because no salvage value. Okay, so how much depreciation per 1 year? 2,000. Okay, after the first year the accumulated depreciation would be 2,000. So after the first year the accumulated depreciation is 2,000 because under straight line method, as per straight line method, first year 2,000 depreciation. After the second year the accumulated depreciation would be 4,000 because for first year 2,000 and for second year 2,000, total 4,000. So now we go for meaning of the accumulated depreciation. So accumulated depreciation is the total amount of depreciation expense that has been charged to a fixed assets since it was acquired. So how many years the life since acquired? 2 years. So per year 2,000, for 2 years 4,000. So it is the accumulated depreciation, and so on until the end of the 5th year when the accumulated depreciation would be 10,000. So up to accumulated depreciation would be 10,000. Okay, next, now we go for accounting treatment of accumulated depreciation. Okay, accumulated depreciation is shown as a contra asset account in the balance sheet, which means that it reduces the value of the related asset. For example, now we got clear cut with example. Okay, if a company has a machine with a cost of 10,000 and accumulated depreciation 2,000, the net book value of the machine would be 8,000. After deducting accumulated depreciation, the cost of the asset is 8,000. So accumulated depreciation is not a cash account and does not affect the statement of cash flows. We know already accumulated depreciation is not a cash account, so it doesn't affect the statement of cash flows. Okay, next, entries. The journal entry to record depreciation expense. So what is the journal entry to record depreciation expense? Debit depreciation expenses account, credit accumulated depreciation account. Okay, so it is a expenditure, that's why we have to debit depreciation expense. Okay, accumulated depreciation is a liability, so that's why we have to credit that accumulated depreciation account. Okay, for example, if the annual depreciation expenses for a machine 2,000, the journal entry would be debit depreciation expense 2000, credit accumulated depreciation account 2000. Okay, now we go for one problem. Okay, problem 1. A company purchased a machine for 50,000 with an estimated useful life of 10 years and a salvage value of 5,000. We know the use of salvage value. Okay, the company uses the straight line method of depreciation. What is the annual depreciation expense and the accumulated depreciation after 5 years? So it is the problem. So what is the annual depreciation expense and the accumulated depreciation after 5 years? So this is the problem. Now we go for answer. So we know how much depreciation per year. How to calculate? The depreciation cost of the machine is 45,000. How to calculate? Because cost of the machine is 50,000 minus salvage value 5,000. So the cost of the machine is 45,000. Okay, next the annual depreciation expenses would be 45,000 by 10 years, because for 10 years. So how much per year? 4,500. I think you know the salvage value meaning. Okay, that's why we have to reduce salvage value from the cost of the asset. So per year depreciation is 4,500. After 5 years, the accumulated depreciation would be how much after 5 years? That means per year 4,500 into 5 years, how much? 22,500 is the accumulated depreciation after 5 years. Okay, next, other concepts relating to accumulated depreciation. Depreciation methods. There are various methods to calculate depreciation, such as straight line method, declining balance method, sum of the year stages method, and units of depreciation method. So these concepts covered under the depreciation concept. Okay, depreciation chapter. Next, second concept, accounting for disposal of assets. When an asset is sold or disposed of, the accumulated depreciation up to the date of disposal is removed from the balance sheet along with the cost of the asset, and any gain or loss on disposal is recognized in the income statement. Do you understand? Accounting for disposal of assets. When sold or disposed of a asset, we have to reduce the accumulated depreciation up to the date of disposal. It's the general one. Okay, so then only the balance sheet asset shows real value. That's why we have to deduct from the asset up to the date of disposal or sale. Okay, if any gain or loss arises, we have to show in income statement. Okay, next, third concept, depreciation and income taxes. So depreciation expense is a tax deductible which reduces the taxable income of a company and lowers its income tax liability. Okay, it's a tax deductible expense. That means we can deduct from the income. Okay, then it reduces the tax liability. Okay, so now we go for once again we go for meaning. So accumulated depreciation is the total amount of depreciation expense that has been charged to a fixed asset since it was acquired. Okay, thank you. Subscribe, share.